It's time for another every 2 week Southern California real estate market update. We're going to cover Orange County, Los Angeles, Ventura, San Bernardino, Riverside, and San Diego. We're going to cover both single family and multifamily numbers. Plus, we're including the foreclosure data for September of 2021 and in the past for both notice of default and notice of trustee sale. Hey there, Christian Walsh with Wire Associates. We're real estate agents based in Southern California, helping buyers and sellers and tenants and landlords make sense of these crazy days. And it's time yet again. Every 2 weeks we cover the market in Southern California, and we can't believe this. Sometimes when we run our numbers, which we pull right from the multiple listing, we have to check them 2, 3, or 4 times to make sure because it doesn't seem right. And this is one of those times. In some cases, they seem too low, and in some cases, they seem too high. This is when you'll have to see to believe. What you're hearing in the national news is very different from what's going on in Southern California in the housing market. So if you're ready to dive into the Orange County, LA, Riverside, San Bernardino, San Diego, Ventura real estate market numbers, hit that like button and let's get started. And away we go. Time to dive into the data, and it is driving me crazy. I feel like the market should be changing. We're hearing about it in the news that inventory is increasing and blah, blah, blah. That's not what we're seeing in most of SoCal, and we're going to run through that right now. So you can see in Orange County for single family for the first half of October 2021, we have yet another crazy market going on. We've got that twist. So we have demand down year over year, and by demand I mean the number of properties going under contract, but it's still at a higher level than the previous years. So it's still at a record high. Between last year and this year, we're at record highs for pending sales. Our number of homes that have been listed is at a record low. So what happens when you mix high levels of properties going under contract and record lows of new listings? You get the twist, and you get a crazy, crazy market in Orange County with multiple offers on everything. And now moving into Los Angeles, and you can see we used to have 3 lines kind of moving along the same path, but things have been changing in LA as well. So we have our listings at another low level, maybe not a record low, but still very low levels. At the same time, we have the number of properties under contract at a record level, more than last year, in fact. So we've got 2 numbers coming very close together. The number of new listings and the number of properties going under contract for single family in LA have not been this close in any previous report that I have done since the beginning of the pandemic, doing these every 2 weeks. So we're getting into an even crazier seller's market in Los Angeles. And Riverside, another market where things are crazy. We got record low listings. Now we did see a drop in the number of properties going under contract, but you can still see, other than last year, it's at a record high. So record low inventory, while we have high levels of properties going under contract, means crazy seller's market. So this is all very different from what you're hearing about other areas. It doesn't matter what's going on in Boise, Idaho, where some YouTuber was talking about how the market's tanking. To be honest, it doesn't matter to us here in Southern California. In fact, part of the reason prices were up in Boise is because of Californians leaving. And you can see that California has an absolute crazy market in SoCal. San Bernardino, here we go. How about a twist there? We've been watching this potentially developing, and looks like it's about to happen. So record number of properties going under contract, more than last year, and a record low number of listings equals a crazy market. Now folks, this time of year we're supposed to be slowing down as we go into the holidays. That's typically what happens. I thought we were starting to see that, but it doesn't look like that. It doesn't look like we're getting back to our typical seasonal slowness. So Ventura has been somewhat atypical, somewhat different from the rest of SoCal in that we've seen record low number of properties going under contract. But we can see in October, first 2 weeks, that it actually has caught up a bit. It's not at last year's record pace, but it is at a record almost as compared to years past. So Ventura looks like it's righted the ship a little bit versus where it was a few months ago, where it looked like it was potentially a canary in the coal mine for a market shift, but hey, it looks like it's going back. In San Diego, absolute madness. We double and triple check these numbers when we see such strange numbers like this, but you can see the inventory is just crazy low. I mean, this is just absolute record low, and we have a twist here in San Diego. So what it looks like is that most of Southern California, the single family market is actually heating up. It is not cooling off, despite what you're hearing about other areas in the country. And this is one of the only places you're going to get single family and multifamily data. Now I know not everybody cares about both, but I feel it's important to continue to track both because we sell both of those. And as an investor or property owner, you should really know what's going on with both markets. So you can see Orange County multifamily has been strong. It picked up later on in the pandemic. Multifamily took a huge hit early on, and it took much longer to come back than single family. So for single family, around May and June, we started to get a rally in that market, and by July, multiple offers. Multifamily took a little bit longer to catch up because of the fact that many tenants weren't paying rent and there were eviction moratoria in place. The eviction moratorium for the state of California has since expired as of the end of September 2021. But so these numbers should potentially start to reflect it in the number of properties going under contract, but it's still a little bit early. So Orange County's been strong. You can see here we have a seller's market. LA is another one that has kind of moved along those three same lines. We've got a low amount of inventory. So LA City and LA County are still under eviction moratoria. So that could mean that investors are still cautious about investing there and now are taking their money to other markets where there isn't an eviction moratorium, and that's the rest of Southern California for the most part. And Riverside, again, here's one we had to quadruple check the numbers. You can see that the number of properties that went under contract in Riverside has absolutely gone through the roof. This is one of the biggest twists we've seen in the markets we're tracking. And this shows that Riverside, which had kind of been a sleeper for a little bit for multifamily, now people want to invest their money there. And again, the eviction moratorium is over in Riverside, so this could be pointing to that. That's why maybe so many properties went under contract in the first 2 weeks of October, and maybe a lot of folks want to get their 1031 exchanges done, so they maybe sold and they're ready to buy, or they're buying and they're going to sell another property, because you can do it any number of ways for a 1031 exchange. San Bernardino has been a solid market. You can see that we have the twist here. Listings have dropped and the number of properties under contract has gone up. I do expect to see more go under contract in San Bernardino now that the eviction moratorium is over. And Ventura, poor Ventura, not huge numbers here, like we say every time. The interesting fact that in the first 2 weeks of October, not a single property went under contract in Ventura, but that's not a big deal. It's usually 2, 4, 6, or 8. So 0 is not atypical. It's an averaging error. It's a law of averages. So we will see this rally back. Doesn't really mean much. And San Diego multifamily is another one that has that big twist like Riverside. So we're seeing a huge number of properties going under contract now that the eviction moratorium is over and listings are down. So we'll see. Maybe some landlords in these different Southern California counties will say, okay, a moratorium's over, now I'll consider selling. So maybe we'll get more inventory. They didn't want to sell at a loss because there were a few tenants not paying. It still isn't easy to get a tenant out if they're not paying, but landlords can return to the notice to terminate tenancy. And of course, we've done a bunch of content on this, so make sure you check out our other videos and our newsletter subscribers. Not only get this stuff, but also get the latest on eviction moratoria in California and beyond. Time to dive into the foreclosure data. So we're tracking this carefully, and this is one where if you're not subscribed to our newsletter, you're gonna want to, because you get all these charts, and you're gonna want to be subscribed to our channel so you can make sure you can continue to follow foreclosures. They were pretty uneventful for a while because of a foreclosure moratorium. That ended at the end of July 2021. So the foreclosure moratorium is over. So we are going to see a change in numbers. I'm going to show you some change now, but expect much more. So first we're starting off with a notice of default, and this is for the month of September, and we're going back to 2015. We want to look at year-over-year data, because if you look at just last year, there were no foreclosures happening. But now we can see that we're starting to return to foreclosure levels that are pretty normal. In LA, they're a little bit low from 2019, but you can see others where they're a little higher than 2019 and in the past. So we're not at atypical levels for notices of default. Now the notice of default is the first step in the foreclosure process. So 120 days after a payment is missed, notice of default goes out. 90 days later, notice of sale. 21 days later is the actual foreclosure sale. Now, for the most part, it takes longer than this. That would be if a lender decided to hit all the exact deadlines. But you have to look at the notice of default because that's the first step. So just for perspective, we got a change in scale to 2011 to show back in busy times for foreclosures in the previous bust. And this wasn't the busiest. This is about as far back as we can go with the data. It sunsets after about 10 years. But you can see the difference, the dramatic difference from 2011 when the market was starting to get slightly better. It didn't turn officially until 2012 in Southern California, but you can see it was getting better. So we're still well below those numbers. So now, just as it's important to look at year-over-year data, now that the moratorium's over for foreclosures, I think it's helpful to look at this year's data to see if we're catching up. So now, again, I mentioned there's a foreclosure moratorium. That means that there shouldn't be any foreclosures, right? Well, no, private lenders still could foreclose, and many did. As you could see, they started the process in the data. But you can see that August, once that foreclosure moratorium stopped, we did have an increase in the notice of defaults. Servicers are not going to race properties through the foreclosure process. As they come out of forbearance and those folks who can't pay and don't qualify for a loan mod or a silent second or any of those things that help them get back on track, we may start to see notices of default, but they're not going to race to do this. So that's why it's important to continue to track this. So we added this in, and hopefully you're still sticking around, you haven't fallen asleep yet. But the notice of trustee sale, the second step in the foreclosure process. Now that the moratorium's over, some properties were eligible to go to the notice of sale, the notice of trustee sale. So that would have been properties that received a notice of default before the pandemic. So those properties could then receive the notice of trustee sale. And we see that. We see these numbers in August and September, an increase in the numbers of notices of trustee sale. So of course, make sure you subscribe to the channel and the newsletter so you get this data as we continue to bring it out through the rest of 2021. So as we get into 2022, we're going to start to see some of the properties start to kick out, go through the entire foreclosure process, and then end up on the market for sale. And remember, we can't give tax or legal advice, but for the most honest and up-to-date real estate advice, subscribe to this channel. Let us know what you're seeing out there. Do you see the market continuing to heat up, or is it starting to cool off in your neck of the woods? I want to know. Make sure you subscribe to our free weekly email newsletter where we cover market updates like this every 2 weeks, plus that foreclosure data, which I know you're not going to want to miss as we get through the end of 2021 and into the housing market 2022. Thanks for tuning in. This has been Christian Walsh, Wire Associates, and we appreciate you.